Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as futures and options. If you're new to the channel, welcome. To give a little background on what we're doing here, I took a chunk of my net worth and I put it into a high yield experiment that is about $500,000 that is including some of my own capital as well as using margin. And please hit the like and subscribe if you like what we're doing here to support the channel. Please know this is not investment advice, not now, not ever. So please do your own due diligence before making any investment decisions. So what I want to do today, I'm going to keep this video very short, very sweet, and just kind of talk about maintenance, the importance of I think, being mindful of your maintenance ratios when you do use margin, okay? So what is margin, right? Margin is a loan, but margin in my mind is good debt, right? I think there's very little debt in the world that constitutes as good debt. And I put margin almost at the top of the list, right? It allows me to borrow low. So I can borrow at lower rates and with a high yield portfolio, keep that spread between my 25 to 30% distributions and the current 4.5% rate that I am currently paying. So a lot of the funds I use, ETFs, closed-end funds, they have low maintenance ratios. And the reason I keep that is I don't, want to get margin called, right? If we have a downturn, a big sell-off, as hedged as I try to keep myself, I still want to be mindful that, at the end of the day, if you get margin called, you lose a lot of control over the portfolio, as brokers can just start selling at will. They don't have to run anything by you. They can literally sell whatever they want, oftentimes at the worst prices, right? So leverage is good on the way up. It can be detrimental on the way down. So just be mindful of, I think, how much margin that you are using, right? I use between 10 and 30% of my available margin. I always keep my margin buffer above 50% when I can. I really don't like falling below 50%. Really like to stay above 60%, to be honest. It's below 60 just because I've got some options collateral out there, as well as I have not brought over any other capital that I've been meaning to bring over. And I did buy some more long puts on the SPY and QQQ. So that into my margin buffer a little bit, no big deal. So right now I'm using about 25, 26% of my available margin. I really don't like going above 30%. And that's why I'm at Robinhood. I've moved a lot of my assets over to Robinhood. I continue to do so just because the margin rate, I can't get a lower rate anywhere else. That is my own personal preference. Robinhood does the job what it's meant to do here. I think the tools could be a little bit better in my opinion, but it's doing its job. So right now, let's see here, looking at just my maintenance ratios, WPay of all my dollar cost average holdings, the one that are the core of my strategy, it's the highest at 30%. So you can see that the margin requirement is going to be 30% of the total market value, right? I've said it before, I ignore the P&L because Robinhood does not reflect distributions. So everything looks like it's always down on Robinhood because they don't factor in all of the dividends and payments. So I ignore that. I calculate everything I've been distributed and add that to, what it says for the P&L typically. GLDY is another example. The maintenance ratio is 25%. Margin requirement is, 1/4 of the market value. One thing I think some investors didn't know this. I really didn't know this up until too long ago, that your broker, wherever you're at, whether you're at Schwab, Robinhood, E-Trade, wherever, they can actually change your maintenance ratio at any time without notice. So I check my maintenance ratios daily. I don't like surprises, especially in that way. So double check your maintenance ratios. Make sure that you're always aware of them. They're changed periodically. I'm thinking about going back into ULTY a little bit. They've kind of had a facelift. I want to see if their new strategy holds up better than what it's been in the past. And Robinhood raised their maintenance on ULTY from 25% to 70%, but then back to 25%. So just be aware that they can change these anytime they want, whenever. Same thing with options, right? So like my QQQ long puts, my SPY long puts, those will eat up 100% of the margin. Now, you are getting a lot of leverage, right? When you buy calls and you buy puts. But however, just know that that premium that you paid for it, whatever that's worth, is still going to eat up 100% of your maintenance. So just be aware, right? It's important just to be aware of everything when you sell a put, like the puts I have on Nike and Chipotle this week that I sold. That collateral, you're not being charged interest on that collateral, but it is eating into your margin buffer, right? Because you've got to put up that cash if you were to be put those shares. Okay. So 25, 30% is the sweet spot, I think, for where you want to be when it comes to margin maintenance, if you don't want all your equity being eaten up. So just be mindful of that. Otherwise, yeah, just again, margin and maintenance, if used responsibly, I think can be a great just boost to your overall strategy and portfolio, especially if you're doing a high yield strategy. What I want to do probably later this weekend is just give a portfolio update and talk a little bit about 2026, kind of more outlook there, what I think is going on. And again, don't forget to hit like and subscribe if you're happy with what we're doing at the channel here. We'd love to hear your comments. We'd love to hear your feedback. And have a Merry Christmas. Enjoy time with family and friends. And don't forget to remember the most important birth that we celebrate that's ever happened. So thanks for your time.